Previously a night trader.
If you're trading the headline that oil is getting cheaper, you're about to be exit liquidity for the smart money.
And finally it's starting to break out. I still believe the technical and infrastructure decay here in the short to midterm, crude oil may see a bull run. You can simply go long the commodity itself with crude oil futures, or by going long options on correlated ETFs or equities.
Stocks drop and oil and gas prices soar as Israel and Iran target key energy facilities.
So we saw the largest intraday trading range in history. I'm already out of my XLE trade, but we might as well just cover oil since this is really the main catalyst for markets right now. We're seeing the biggest dispersion since 2022. While oil is not moving through the Strait of Hormuz, they are still shipping oil through the black market. So there's a few different scenarios that this maps out. The red line is outlining if the oil price scenario is severe. GDP looks to still be positive. I've been seeing a lot of talk online. Okay, there's going to be a new recession because of the high oil prices, right? I just keep seeing that over and over. Well, we haven't even had one negative quarter of GDP yet, right? Personally, I don't see any signs of going to a negative level, even for one quarter. Yeah, I can see it slowing for sure. But like we were talking about last week, the Atlanta Fed did put out an estimate that it will be lower, but it will still be an amount of growth. Going back in history, we can see back in the 19th century, we were a lot more dependent on oil when it came to generating dollar amounts of GDP. It takes a lot less oil to produce basically the same amount of GDP that we saw back then. So the Fed, they've completely cut interest rate cuts off the table. We can see that on these probabilities right here, because this is where the Fed fund is at right now, 350 to 375. The next meeting, there's a 95% chance they're going to keep it the same. So it looks like as of right now, markets are pricing in no rate cuts for 2026. When we look at the Fed board, we have a mixed bag here. Now, most of the Fed are net positive on rate cuts, but there are a couple that are actually for interest rate hikes. We have some doves. The Atlanta Fed did put out an estimate that it will be lower, but it will still be an amount of growth. Jerome Powell, he himself is neutral. It's very, very Powell-esque of him. The majority, dovish. Could we have room for a couple more cuts later this year? Now, another thing we don't want to miss. The Treasury just made the biggest bond buyback in history. So it was a $15 billion bond buyback. And what they're doing is they're buying close to expiring bonds and replacing them with newer bonds with longer duration. In the short term, this is going to bring a lot of liquidity to banks in the private sector. This is like a low-key way of doing QE. This is definitely going to expand them. Bringing up the Fed balance sheet, the highest the Fed balance sheet has been this year so far. So technically, we're almost in a baby QE phase to bring some liquidity to the system. Now, ECB, the European Central Bank, they kept rates the same today. So it's at almost 2%. Now, they were actually discussing, hey, we're open to raising interest rates if we need to. Looking at the S&P Asset Manager net change, we can see that, at least with the S&P 500 futures, this is the most they've sold S&P 500 futures since 2020. Is actually a little bit more than 2020. So this is actually the highest level in over a decade. We've been seeing they've been adding to the net short S&P position, as well as the net short Dow 30 index position, but going long the NASDAQ index. We hit this extreme fear level on the fear and greed index for the first time this year. Now we've gone down even more, and this is actually more fear than we had since Thanksgiving last year. Looking at the world markets, we can see that non-US equities have been driving this market decline. So US equities aggregated, they're down almost 4%. If we look at other equities, Asian, European equities, UK equities is actually worse than even Europe, which is interesting, than the Japanese equities. So those guys are really dragging us down. You guys might have seen that I've been trading the... If you want to see how we actually predict these shifts before the first shot is fired, without the fluff, watch my next video. I'm pulling back the curtain on the exact system we use to stay ahead of the curve. I'll see you there.